All right, well, how's everybody doing? Let's do another audio visual check. Can everybody see the screen? Type it at 3 in the chat if you can see my screen and hear me loud and clear. All right, good. Well, we're ready to rock and roll. Appreciate everybody's time today and want to give a shout out to Jeanette and the gang at TradeThirsty. What a great team I'm able to be a part of. And I feel like she maybe has a birthday or something coming up. She really did a good job buttering me up there. But always appreciative of Jeanette and things she does for me and my family, and grateful to be able to present to everybody today. So let's go ahead and get started. Everybody seems to can see and hear me okay. And again, my name is Silas Peters with Seasonal Swing Trader, and you are here to learn mechanical done for you strategy, any market and any time frame. So I know we got through a lot of the other good stuff this morning about where everybody's from, so we do appreciate and respect your time today. We're going to make this education beneficial for you. Let's take a quick moment and read the ever important risk disclaimer. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading securities, options, futures, forex, equities. Only risk capital should be used, and you can lose money in trading. So take a quick minute to read that. While I introduce myself again, my name is Silas Peters with Seasonal Swing Trader. This is me standing in front of my alma mater, University of Alabama in Tuscaloosa, Alabama, with my two beautiful blue-eyed, blonde-haired beauties there that hopefully will attend that great school someday. After graduation, 3 days after graduation, I packed up my small belongings, drove to the great city of Chicago, and that is really where I cut my teeth in the commodity markets, working at the Chicago Board of Trade, and just really bitten by the commodity bug and never looked back. While there, I helped run a global trading desk, placing and managing books of trades in the Americas, Asian, and European sessions, working mostly with large block order flow for hedge funds, banks, CTAs, and larger retail, spec, and institutional traders. Also been a part of building and managing several futures and equity brokerage firms, broker dealers, have worked as an investment consultant for a private family office. I hold or have held these various securities, futures, and forex licenses. And then in 2016, as Jeanette mentioned, I launched Seasonal Swing Trader. So very proud to be part of Seasonal Swing Trader, proud of our service as well as our tight-knit community. So is this your trading desk? Does your trading desk look like this, or is it something that you aspire to have your office look like? Well, I found this on the internet and I thought it was funny, at least at the time. And it is what my desk looked like in Chicago, working on a global execution desk, but certainly not today. The point is, we're going to try to keep today's presentation nice, clean, and simple, using the old-fashioned KISS principle, and just reaffirm that it does not need to look like this. I feel like when my friends and family still ask me what I do, I still have a hard time explaining to them what I do, and they don't really understand, and this is what they envision my office looks like, but it certainly does not look like that. I have a handful of monitors, but we're going to keep things simple, get rid of all of the noise. So let's play a fun little game here. Paralysis analysis. Are you a victim? Type in the chat. Are you a victim? Have you been a victim? Do you know somebody that's a victim? Per Wikipedia, paralysis analysis is a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect, paralyzing the outcome. So I've seen lots of people that are current victims and were past victims. Well, I'm raising my hand. I have been a victim of paralysis analysis. I've had charts that over here on the right that have looked like that, and I'm a self-proclaimed indicator junkie, but then at the end of the day, I end up removing all of that noise and going back to simplicity. All right, so I like to get an idea of who I'm speaking to, what kind of crowd we have here. What do you trade? Tell me, do you trade stocks, ETFs, options, futures, forex, cryptocurrency, any of these or all of the above? I trade all of the above: stocks, options, futures, and forex, with the exception of crypto. I do trade all these actively. Other than crypto, I do not trade those actively. I do have baskets of various accounts involved with cryptocurrency as well as Bitcoin, of course. But I kind of view that as my my lottery ticket, or maybe someday I'll log in and it pays for a child's education. Who knows? But do trade all these others actively. And the point is, what we're going to learn today, or what I'm going to teach you today, you're going to be able to apply immediately, regardless of all these. So we've got, let's take a look at the chat. We've got a really large mix, a lot of options and futures, stocks only, all of the above, a couple forex people, everything but crypto, same thing here. A lot of stocks, a lot of stock, futures, future stocks and options. So really good, diverse crew here. And so that's good news. What I'm going to share with you today is highly accurate. It's profitable. It works in all markets, in all time frames, and it's about 99% mechanical. But most importantly, it is simple. So my agenda and promise to you is that I'm going to teach you a simple and mechanical setup that is repeatable regardless of the market or time frame. And I want you to hold my feet to the fire at the end of the presentation and make sure that I deliver that promise to you. But make a promise to me, don't go off and start looking at charts. You'll want to do that during this presentation. Don't do that. Watch the rest of the presentation and take what you learned today and apply it in real-time trading. So before we get started into the pattern, I want to talk about a couple of things. I really don't like beating my chest and talking about trade results and things like that, because the market can quickly humble you. So we do enjoy our profits when we make them, but we know that there are losses ahead because trading is nothing 100% guaranteed. But this is a trade that I was proud of, and we talked about it for several months in late 2018, especially going into Christmas time, mid to late December. I talked about this over and over again, that we were looking for a very high probability setup in the energy markets. I don't know if you can see these symbols, but moving from left to right, we have crude oil, unleaded gas, and nat gas. And these were trades that we talked about over and over again in free webinars, as well as in our membership. And they went on and met our objective and then some. And those are trades that we took in our service. So I'm going to teach you exactly what we were looking for here and why, so you can take that into your own trading. Again, these are other markets that we've talked about over the last several months here, what I was calling sleeper markets. They had not set up yet. They were being lulled to sleep by the market. The participants were falling asleep at the wheel, and we were watching these very, very closely. And these are trades, these are seasonal trades here in coffee and orange juice that we were watching. We were saying be on high alert for potential longs. We shared all of those details. And then what happened? We get those moves that we anticipated: $6,800 in coffee, $3,000 in OJ. We also have been talking about grains. Grains have been very popular recently in the news with the Chinese tariff headlines, as well as the weather out in the Midwest. And we talked about trades in corn, wheat, and beans. And that's exactly what we got. We got the moves that we expected, and now we're getting ready to change gears and look for potential shorts in these markets. But don't worry, I'm going to show you exactly why and what we were looking at in each of those markets. So the setup responsible for the equity curve below, drum rolls please, is the 1, 2, 3 pattern, or sometimes referred to as the 1, 2, 3 top or bottom. So let's take a quick pause here and tell me who is familiar with the 1, 2, 3 pattern, or the 1, 2, 3 top or bottom pattern. So I think a lot of people are pretty familiar with it. So I'm seeing lots of yeses, and surprisingly a few no's. So that's good. I certainly did not invent this pattern. Wish I did, but it doesn't really matter. This pattern, this setup has been around for the ages, and it is a very important pattern, I think you'll see, but it is highly, and I mean highly, overlooked by most traders, probably because of the fact of its simplicity. It's so simple, but yet so effective that I reached back out and put it back into my trading arsenal, and it's one of my prime pattern setups that I use on a daily basis, regardless of the time frame. So let's go ahead and get right to it. Let's talk about the context first, and then we're going to look at several chart examples. So the setup is price action based. It's a pattern that is comprised of a low and then a higher high and then a higher low. and then a break of that higher high in the instance that we're going long, inverse if short. It anticipates a change in the trend from up to down on a break below the number 2 or the B point, anticipates a change in trend from down to up on a break above the number 2 or B point. And generally speaking, the more bars it takes to complete the pattern, the bigger the move. Oops. Sorry, I think I jumped a slide here. Okay, sorry about that. The strategy. So it usually occurs at the end of trends and swings. It can be an indication of a change in trend. Can also be found within a trading range. And one point I really want to make here is it works extremely well when the pattern sets up at important or significant areas of support and resistance, head and shoulders, double tops, double bottoms, etc. And it can be considered, or one would argue that it could be a counter trend or reversal strategy. In some cases it is, but we're going to show you why it is such a high probability setup. So let's look at a couple of charts. Don't worry about, it doesn't matter what symbol this is or what time frame, just try to get the general picture, and we're going to look at very specific trade setups. So here on the chart we have a 0.1, which becomes the highest peak of price action on this particular time frame. Once the market pulls back down and finds short-term support, we get a number 2 establishment. When the market retraces higher without taking out the 1, we have our number 3. So we have a 1, 2, 3, and we're looking to get short on a break and or close below the number 2 point. So we have 1, 2, 3, the market breaks below the number 2, and then it carries on with its action. The 1, 2, 3 bottom, as you would suspect, it's just the same but a complete opposite. So where the market has moved down, found support, retraces higher, giving us established number 1. The market trades higher. Once it gets exhausted and pulls back, we have an established number 2. And the market pulls down. Once we find support, again, without taking out the number 1 low, we have a 3. 1, 2, 3. And we know that the market, that we would be looking for longs here above the number 2. So we have a 1, 2, 3, and don't know what ended up happening here, but we knew that we would be getting long above the number 2 point. So let's look at some chart examples. The 1, 2, 3 pattern top. Now this is a daily chart on the Aussie dollar or the 6A, the Australian dollar. And on a daily chart, what we ideally like to look at are 52-week highs or 52-week lows. Now we don't have to absolutely be looking for 52-week highs or 52-week lows, but that's where you're going to find the highest probability situations. Now what I like to do, or what some do, is we can dial that back in and say, look, for every 6 months, that's just going to give you more opportunities. But again, the 52-week highs and 52-week lows, as per this, the principles of the pattern work best on the daily chart. So here we have prices that have moved up, established a 52-week high. The market pulls back down. Once that market stops making new lows and then retraces back higher, we have a number 2. When the market rolls back lower and stops making new highs, we have a number 3, 1, 2, 3, and then we are looking to short below the number 2 point. So you say, okay, that's great. Well, where is our stop and where is our target? Well, very simply, the initial stop or initial risk must be above the number 1 point in case that we're going short. Your target is the distance between the number 1 and the number 2. So it's the high of the number 1 top here minus the low of the number 2 point. And in this case, it was 225 ticks. You simply measure that target or that distance from this low down and for your target level. It's 225 ticks or $2,250 per contract. So let's stop right now. I think we have already shared you the 99% mechanical nature of the strategy. Where do we get in? Where's our risk? And where's our target? So we've already eliminated a lot of the question marks about what we need to do once we approach this setup. Where do we get in? Where's our risk? And where's our target? Another top example, a daily chart on Walmart, WMT. We have a new 52-week high right here. Market pulls back down, retraces higher off of this short-term support. It gives us our number 2. The market trades higher but does not take out the number 1, rolls back lower, giving us a 1, 2, 3. So now we have this 1, 2, 3 setup that we know days in advance what we're going to do. We know that we're going to get short on breaks and closes below the number 2. We immediately know if we get into the trade where our stops are and where our targets are. It's the distance between the 1 and the number 2. In this case, it was $5. Let's look at 1, 2, 3 patterns. Bottom. This is a 15-minute chart of the E-mini S&P, and we have a number 1 point that's put in at a session low. So let's define what the session low is. Now, if you don't trade futures or forex, this may sound a little foreign to you, but futures and forex virtually trade around the clock, about 23.6. So when I refer to a session low or a session high, I'm going back to the Globex open. For me, that's 5 p.m. Central. Globex opens at on Sunday afternoons at 5 p.m. Central, and then trades virtually around the clock with about an hour break each evening from 4 to 5. So when I start my trading days at around 6 a.m. Central, I'm looking for new session highs and new session lows the rest of the day, going back to the Globex open. So just look to the left. So I'm looking to the left. That's encompassing what's happened in the European session, what's happened in the Asian session, and what happened on the Globex open, which is equally important. Now, if you're in Europe and you're trading the European session, just look left. Are you making new session highs, new session lows? If you're trading the New York session and you start your day at the, say, 8:30 a.m. cash open, or you step in at lunch, look left. Are you making new highs, making new lows? And you'll often see some of these turning points occur either early morning, or you'll get the session highs or session lows perhaps at lunch or in the afternoon. It usually provides some really good setups. So here in this example, we made that session low on a 15-minute bar. 1, 2, 3. The market breaks out, trades higher than the number 2, pulls back, hooks back up, and reaches its 20-point profit objective. So there's a couple of different entry techniques, and we talk about that in more depth through our program, but there's a couple of different ways you can do. The more aggressive technique is just to work buy stops here above a tick or two above the number 2 point, which is going to immediately trigger you long. The more conservative or prudent method to me is to wait for a pullback or a retest of this breakout level. It's very often that the market will come back and retest. Or third option is to wait for the market to come back down, not only retest, but even come back through and trade, take the next break higher. Because sometimes you get the fake out, the market trades back down. In this case, wait for it to trade back higher, you get the hook, and it's off to the races. So I see a lot of questions coming in, and I promise I'll get to those at the end of the presentation. I want to focus on the strategy here so you have something to learn and use, and then I'll answer your questions. All right, so another chart of the 1, 2, 3 bottom pattern. This is a weekly chart on Apple. And if you're looking at weekly charts, this is really just a hell of a way to do some position trading, catch some serious moves, manage longer term portfolios, etc. So here we have a number 1 point put in a multi-week low. And remember what I said earlier, this is also in conjunction with a what? A double bottom, another very high probability technical pattern. So we have a 1, 2, 3, also double bottom. The market explodes higher, this large bullish candle here, breaking above the number 2 point. Market pulls back for the retest, and that's where we get long. We buy Apple stock, we buy calls, spreads, we sell out of the money put spreads or cash secure puts, depending on your capital size, and you can ride a longer term trend. All right, so must show this, the failed trade. They don't, look at everybody just leaving. It's not 100% accurate. No, sorry to burst your bubble. They don't all work. There is no holy grail in trading, but this is an example of a failed trade. This is a good trade, a trade I would have taken. I think this is what, on a 5-minute S&P chart. We had a 1, 2, 3 new session high, 1, 2, 3 top, broke the trend line, looks like a good trade. See it breaks down here, or if you took the second entry right here, looks like a good trade, probably good for a couple points, not real sure, but then the market reverses back higher. And here is, depending on your money or risk management, you would have been stopped out here above the next line of resistance, or if you left it up here at the number 1, you would have been stopped out above the number 1. But you can see that we actually had a new setup. 1, 2, 3 breaks down here for a good trade. So that's what a failed trade looks like. And then this is just a no trigger example. It's neither good, bad, nor ugly. It's just what it is, a no trigger trade. So here we have a 1, 2, 3 setup looking to get long here. What happens? The market comes down, takes out the number 1 low, so it voids the trade. So no harm, no foul. We look and wait for a new setup. Here we have a new 1, 2, 3 looking to get long here. Market says nope, takes out the number 1 low. It voids the trade. It keeps us out of the trade. 1, 2, 3. We get a breakout above the number 2, and then we finally get our long trigger on the last example. So when this happens, it can be really a good thing because the market is now moving lower, providing a better value buy for you or a better value sell if we were looking to short. But the market keeps us out of these fakes while the market continues to hunt for lower levels. 1, 2, 3 pattern trade management, again, is just to recap, the confirmation of entries on a break above the number 2 point if we're going long, or a break or close below the number 2 point for a short. Exit strategies, again, and I will reiterate this, the initial target must be the distance between the number 1 and number 2 points. It's got to be the initial target between the 1 and 2. It's just uncanny how often that the market will come tag that number 1 target objective and then often reverse back against you. So keep that in mind. Always shoot for that initial target of 1. And if you're trading multiple contracts, multiple shares, or whatever you're doing, you can trail the stop. So how do we trail the stop or manage our position? Always like to use just good old-fashioned price action, support and resistance levels, basic trend line analysis, Fibonacci numbers. Others are using moving averages, PAR-SAR. There's really, dozens of different ways you could manage it, and you would just do that based on your particular style. So we've talked about the setup that works on any markets: pips, Pepsi, pot, whether it's potash or pot stocks. Pork bellies, unfortunately, no longer traded on the CME, rest in peace, or the Polish zloty. And on any time frame, tick, 5-minute, 15, hourly, 240 daily, weekly, monthly, and any trading style. So tell me, are you a position trader, swing trader, scalper, day trader? What kind of traders are you? I got to see earlier that we had a large mix of stocks, options, futures, forex traders. So a lot of swing traders, some day traders, mostly swing. There's a couple position and actually some scalpers. All right. So the point of that exercise is that you've got to determine what your bread and butter is. My bread and butter for me and for my situation and my style and my preference is I find that the 5-minute, I like the 5-minute chart for intraday trades, and the markets that I do that on are, say, the S&P, NASDAQ, crude oil, some of the currencies and bonds. Don't day trade stocks. Also like the 60 or the hourly and the 240 or 4-hour to do intermediate, short-term to intermediate swings. Really like to do those on currencies, and then of course swing trading off of the daily chart. That was where I really got started with this particular method. I was working corporate job, good old 8 to 5, and didn't have time to look at the markets during the day. So I would look at the markets in the evenings or early in the morning before I went to work, and I would put my trades on, and I would come home and check and see where everything was at. So you've seen the proof. Let's view some real trade examples. We already actually looked at real trade examples, but let's look at some real trade examples that we've done recently with Seasonal Swing Trader. So this is a daily chart of crude oil. Daily chart of crude oil, very popular market. Everybody's familiar with crude. Everybody has their important expert guru opinion on what it's going to do. I don't try to make an expert opinion on anything. All I do is look at the price action, look at the setups, and let the market dictate and tell me what I feel it's going to do in a high probability situation. So let's start over here from the left. Feel free to read along the text on the right. I'm going to look at the chart and work from left to right. So here we have a 52-week high. So we're looking for a new number 1 point. We get that 1, we pull back, we have established number 2, we retrace higher without taking out the number 1. 1, 2, 3, we get a break down and close below the number 2 point, and it reaches our $3 profit objective. So this is kind of a shallow example of a 1, 2, 3 top, but it is a 1, 2, 3 top regardless. So we have a 1, 2, 3. We knew immediately ahead of time where our entry was, where our stop was, and where our target was. We've eliminated all of the guesswork. We don't have to sit there and worry and start sweating bullets. Oh, well, what am I going to do? We already know that before the fact. So then the market decides to trade range bound, and some may say, well, why didn't you trade this? Isn't this a 1, 2, 3? It is. It's a 1, 2, 3, breaks above here, but to me, all of this is noise. I'm only looking for 52-week, and in some cases, 6-month highs or lows. So forget this range. There are plenty of other markets to look at. So here we come back up. We have a new number 1 point. Why? Because it's a new 52-week high. This high surpasses this high back here. So we have a new 52-week high, 1, 2, 3. Again, kind of shallow, but it's a good 1, 2, 3. We're also coming to a very, very high probability seasonal time frame where this market is expected to go lower. So we have a good 1, 2, 3 setup combined with seasonality, and we get the move that we're looking for, which is $4 or $4,000 a contract. Now, this is a trade that we took in our membership, and this trade or this market ultimately ended up moving down $20,000 plus per contract. Now, we didn't catch the entire move, but we damn sure caught a large chunk of it, and we did so by shorting crude oil outright, selling out of the money call spreads, buying puts, put options, and trading USO. So now we come down, and you may not know that this is a 52-week, we're making 52-week lows because you can't see to the left, but I know that it was because I traded this market. So here we're making new 52-week lows. I'm now looking for a 1, 2, 3 bottom. Here we have a 1, 2, 3. Well, what happens? The market takes out the number 1 low. We start our count over. So now we come to this point, which is very interesting. I'm really licking my chops here. At this setup, not only do we have a 1, 2, 3, but we also have another one of my high probability patterns, which is the triangle. So we have a triangle pattern. I am looking to back the truck up here and get long above this level. Well, what happens is the market says, I want to go lower, and the market takes out the number 1 and it trades lower. So it kept my emotions in check from not going long based on what I thought or felt that the market should do. The market did not confirm or break above the number 2, and we start our count over. So here the market moves lower, 1, 2, 3. We get a break above the number 2, and it's good for $5 or $5,000 per contract. So does that make sense so far? I want you to remember this crude oil chart, okay? That's the only thing I'm going to ask you to do is remember this crude oil chart. We're going to come back to it later in the presentation. Gold. This is another market that everybody likes to watch, everybody's familiar with, and this is GLD. This is the ETF. Now, when I trade commodities or futures, I'm going to start with the commodities or futures contract. Why? Because it's a much more fluid market, much more liquid. It's trading virtually around the clock. But regardless of what you're looking at, you can back into it with the comparable ETF, and so that's what we're looking at. But you're seeing that these gaps here because gold stops trading with the rest of the stock market at 3 p.m. Central each day. So, but the same principles apply. So we're looking at GLD. Start over here on the left. We have a 1, 2, 3. We get breaks down below the number 2 point, reaches our $4 profit objective. Why $4? It's the distance between the number 1 high and the number 2 low. $4 reaches the target. Here we're looking to go long now. 1, 2, 3, also a double bottom, get breaks and closes above the number 2 point, reaches its $2 profit objective. Now again, kind of similar to the crude chart, well, you have all this action. Somebody say, well, you missed this huge move, this huge short. Well, maybe I did. Don't worry, there's hundreds, if not thousands of other markets to look at. I'm only looking for new 52-week highs or 52-week lows. The market comes down, I'm looking for a new long trade. We're making new lows, 1, 2, 3, getting ready to go long here, but the market, you can see, just ekes out a new low, taking out this number 1. So we start our count over. 1, 2, 3, market gaps above the number 2 point, spends a couple days up here, comes back down for the retest, also have a trend line retest, and that's where we get long gold, gold futures options, GLD, call options, etc. All right, so making sense so far. Good deal. Here's a daily chart on Delta, DAL, Delta Airlines. I don't think I have to go through each of these trade examples. You should be seeing the point here. Here's a 1, 2, 3. We break above and come back and get a retest for $4. We flip to the short side, 1, 2, 3. This one had a little gap down, and we've got members that trade like every single move, so they'll trade this gap down and still trade it lower. I personally like to wait for, if we get a gap situation, is wait for it to come back and retest. And if we don't get the retest and it just takes off like it did in this example, that's okay. Again, other markets available. We get another shorting opportunity, 1, 2, 3. Market has a big swoosh down here below the number 2. Doesn't quite give you the retest, but gives you a chance to enter. And then we flip back to the long side, 1, 2, 3, for a long trade of $8 plus. So again, this is just one stock, one example. So imagine the possibilities when you have all the other markets to look at. So for my forex friends, here is a 4-hour chart of the CAD Swissy, Canadian dollar versus the Swiss franc. Again, multi-session low, meaning we put in a low or a new high over multiple sessions for the 1, 2, 3 criteria. Here we go, 1, 2, 3, also double bottom. Aggressive traders, again, could have taken this long immediately above the number 2 break. A more conservative method would wait for the retest or the loop or hook back higher above the number 2 breakout. That's good for 70 pips. And then we come up and here we give a short, small little 40 pip short on this trade. All right. Moving right along. So now we have, this is a 5-minute chart of the E-mini NASDAQ. NASDAQ is a great market along with the E-mini S&P to trade this setup. Here is this is one session, folks. This is just one daily session. So we have a 1, 2, 3. We get a break and close above the number 2 point. If we get long on the loop back up above the number 2, that was good for 13 points. See that we're making new session highs, new session highs. We finally get a final session high here, 1, 2, 3, breaks below the number 2 point. We already knew our profit objective, which was approximately 20 points. And this one made us exercise some patience for a little bit, but finally broke down hard, met our profit objective. And this is probably in the afternoon, if I'm guessing. We made one last flush low here in the session, came back higher, 1, 2, 3. Break and close above the number 2, and if you're lucky enough, you're working a limit here back at the retest, that met your 30-point profit objective in short order. Okay, so why are you here? You're here to learn my mechanical done-for-you strategy for all markets and all time frames. So do you remember the promise I made to you at the beginning of the session? Have I fulfilled my promise to you thus far? I hope I see a lot of yeses. All right, so, all right, good. Don't you say no. All right. So, but wait, famous last words, but wait. Or as they say in the Deep South, hold my beer and watch this. Doesn't usually end up working out for that person, but this will. So what if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the target were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? So do you remember I asked you one thing? What was that? To remember that crude oil chart, remember the charts from earlier? All right, so here is that same crude oil chart. Here's that same crude oil chart we just looked at about 2 minutes ago. So I hope you remember. That was only about 2 minutes ago. I've got a bad short-term memory, but that was just a few minutes ago. So here's that same daily chart on crude oil. So first thing you may say, well, what the heck are all these arrows and these lines? Well, you can read right here, green, red, and blue. So let's talk about them. So the green arrow is your number 1 point. The red arrow is your number 2 point. And the blue arrow is your number 3 point. 1, 2, 3. Now you'll see this little white chevron or stealth signal, and all that is, that's not an arrow to go short or go long or anything like that. That's all it is saying, hey, That is the bar that broke below the number 2 point. So it's like a, hey, it's waving at you. Heads up, we broke below the number 2 point. Let's get ready to take some action. So the more visuals, the better. So we have a 1, 2, 3. We get the white chevron notifying us that we broke. You can see it right here. You can see it down here. And then let's talk about the lines. You folks are smart people. I'm sure you've already figured it out. But the red line here is where our stop is. The blue line is our breakout level. The lime green line is target 1. Remember, that's the distance between the 1 and the 2. Measured down below the number 2, that's target 1. And then the dark green line is target 2, and that is simply 2 times target 1. So we have 1, 2, 3, we break, hits target 1, hits target 2. Now, if you recall, I talked about this area down here. Well, why, you say, well, why do we see all these green arrows? Why is this green, 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 green? It's telling you that, hey, we are looking for new lows. We're making new 52-week lows. Low, 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 low. You stop making those lows, we pull back higher, we get a number 2, and then we pull back after making those highs, giving us a 3. 1, 2, 3, looking to get long, but then we get no chevron, nor do we get any new lines because we never broke. The pattern never confirmed, so you're not going to get these lines or these chevrons. There's no repainting of any of this. It all happens in real time as it unfolds. So gold, remember the same example we talked about here, GLD. Here's our little short 1, 2, 3 bottom here, hits target 1, target 2. Here, all this noise down here, and that's exactly what it is. It's looking for a bottom, 1, 2, 3, new lows, 1, 2, 3, new lows, 1, 2, 3. We finally get that, we break above, hits target 1, target 2, and hopefully you're trailing your stop. So no more hand drawing, no more guessing, no calculations, and no repainting. Using technology at its best. So here is the, I don't know if this is the same 5-minute NASDAQ chart, but it's good enough for government work. It's this is a 5-minute chart of the NASDAQ, all in one session. You can see we have 4 setups. We have a short here, we get breaks and closes below the number 2, hits target 1, hits target 2. Here we get a break above the number 2, hits target 1, doesn't quite get up to target 2. Then so I get asked this question a lot, does it work in range bound markets? Well, yes, it should, because we're looking for session highs, session lows, or 52-week highs, 52-week lows. We're not trading in the middle of all the crap, right? So here we have a 1, 2, 3, get breaks above the number 2, a couple of retests, comes and hits target 1, target 2. You can see we're starting to look for new shorts. 1, 2, 1, 2, 3, and then we get one last short here at the end of the session. All right, simple enough. So is this training for you? It's something that you have to ask yourself and only you can answer. So if you're new to the markets and want to jumpstart your success, if you're tired of all the noise that we talked about, the indicator overload, paralysis analysis, if you simply want to simplify your trading and just add a new strategy to your toolbox, a new arrow to your quiver, or if you need a specific step-by-step plan and want to avoid learning it all on your own, then this could be for you. Don't know, it's not for everybody, but it could be for you. It's something that you can do very part-time. So do have a special offer for today's workshop attendees only. I'm pleased to offer the 3S code high-low indicator and scanner for the following platforms: Thinkorswim, TradeStation, NinjaTrader 8, and MT4. Also going to throw in Chart Pattern Principles PDF Manual and Trading Guide, Chart Pattern Cheat Sheet, 25 Top Option Strategies Guide, VIP email support, and monthly member bonus sessions. So let's take a look at a couple more charts. Here's a daily chart of CRUDE. You can see we have a nice 3 trades here. We have a short, and then a short, and then a nice long. You know immediately where your stops and targets are. Here's a chart of Bank of America, BAC. Same thing here. We have a good looking long trade, another long trade, and then another long trade. And look, folks, let me just tell you, my wife teaches ballet, and I've got an 8- and 6-year-old two girls, 8 and 6 years old. They don't know a flying flip about the markets, regardless of how many times I try to tell them what I do and what all this means and what it is. But I really wanted to make this as simple as possible and break it down so anybody could use. And I said, so I explained the strategy, kind of shared with them what I'm going over with you today. I said, does this make sense? And we looked at it, and they were all able to acknowledge, yes, I understand. So I don't remember kindergarten, but I do remember learning my primary colors and counting to 3, and that's really about all you need to know to take advantage of this incredibly accurate pattern. So here's a chart of LUV, Southwest, love. Here we have a short here, reaches target. Look at that, target 1 right to the tick. Here we have another trade. This is a failed trade, the losing trade. We get a break and then reverses, stops us out. And here's another short, hits target 1, target 2. And what do you know? It reverses. So we've been looking at chart examples on Thinkorswim. And this is an example of the scanner. So why do all the work when we built a scanning component for you? So to create your own watch list. So this is a real snapshot here of my Thinkorswim platform. You see I'm scanning for top patterns in the Russell 1000, only looking for optionable stocks, looking for $20 a share or higher. You see the custom watch list. So we have built this indicator and scanner for Thinkorswim on TradeStation. I apologize, this one's not updated with the pretty little lines, but you can see the chart and the watch list. Here's what it looks like on NinjaTrader 8, and then here's what it looks like on MT4, a 4-hour chart of the Euro Kiwi. Now, full disclaimer, there is no scanning component on MT4. It's just the way that they're built, but you do get the scanning component on NT8, TOS, and TradeStation. So we all know that there's no real private crystal ball for consistent in the markets. We're all big boys and girls, but I do like to view this as my crystal ball. I got a process before I go into the market each day. I scan, I look for the setups, I know my entry, and I know my exits. So today you can start profiting from these predictable patterns with the 3S Code Pro package. Again, the 3S Code High-Low Indicator Scanner, Thinkorswim, TradeStation, NinjaTrader 8, MT4. Yes, you get access to all those platforms. Also going to throw in my 90-page plus chart pattern principles PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, monthly member bonus sessions, and access to the SST Pro Trade Alert service. So we offered it at all of those pricing points, and today we're making it special for $397. One-time fee, $397. Let's cover what the offer is again. Indicator and scanner. You're going to get visual plots of the 1, 2, 3 top and bottom reversal areas, entry, exit, stop, and target levels. All of the settings are customizable. It's really great out of the box. Pretty black and white, but if you want to change the look back periods, you don't like the colors, you don't like the arrows, most of it is customizable. Again, the offer link is seasonalswingtrader.com/3, and let me put that into the chat for you. There you go, seasonalswingtrader.com/3. And it's a one-time payment of $397. So if you want results that look like this, this is from inception of late 2016 to December 18, all trading the 3S Code pattern. It's all trading 3S Code pattern, swing trading 2 contracts. And if we have time, we'll take a look at what we have done in 2019. So here, let's cover the bonuses. Oops, you're going to get a 90+ page PDF showing other high probability patterns, option strategies, seasonal market trends, order types, etc. Bonus 2, 25 top option strategy guide, literally strategies for all account sizes, everything from your basic calls and puts to verticals to calendars to butterflies, iron condors, etc. And then bonus 3, 30 days access to the flagship Seasonal Swing Trader Pro Trade Alert service. Now, this says 3 to 5 trade ideas per week. You're really going to get a lot more than that, but you're going to get all of the necessary criteria you need to make an educated decision. entering exit dates, projected historical moves, the average win percent, and so forth. So I do want to limit this to 25 spots because, yes, I do monitor our support inbox. We do have support people waiting by, but we do want to make sure that everybody is taken care of, and we want to limit this to 25 spots today. So it's a one-time payment of $397, seasonalswingtrader.com/3, and I'm going to start answering your questions here momentarily. So let's take a minute here and just see proof. These are testimonials that come in all the time. I don't ask for them, don't solicit them. They come in, you can see, here's what's kind of cool. This guy sent in a screenshot of his trading account, up, $7,000 on Campbell's Soup, lost $950 with AMBA, up $1,300 for GPOR. Just minor wins and losses, simple calls and puts, no spreads. Here's an example of what the SST Pro Trade Alert service looks like if you choose to take SMS. You don't have to get SMS. Don't worry, we're not blowing you up all day and night with text alerts, only when there are relevant trading opportunities. So you see that we leave no stone unturned. We're giving you the symbols, obviously, giving you the premium. We're giving you stops, risk management, taking profits on half, buying to close, moving stops. We don't leave you hanging. We don't leave you out to the wolves. We're trading these real time in our real accounts, so we're with you every step of the way. Here's just another example of a trade that we sent out. Actually, we did send an alert out on Sunday evening. We had some Brexit news pending, so we wanted to protect our positions in the currencies, so we did send out an alert on Sunday, but that is pretty rare. So again, I do eat what I cook, and I like steak. So this is a snapshot of positions in my Thinkorswim account, where I've traded mostly equities and some futures. And then in my futures account, I've got options here in crude oil, cotton, copper, yen, nat gas, and so forth. And then this is just an example, another example of what it looks like on a 5-minute S&P chart. 5-minute S&P chart, really nice, clean 1, 2, 3 breakdown, get a couple of retests, hits target 1, and then goes right to target 2. So here is the offer once more, 3S Code Pro Package, $397. Let's take some questions before I run out of time. Let me see how I'm doing on time. I think I've got a couple minutes here. And so the question, do I only enter after the white chevron? No, that's just indicating that we have broken below the number 2 or above the number 2, so it's in effect triggered the pattern. It's not just a blanket buy alert or sell alert. It's only a visual telling me that we broke. You can remove that if you don't like it, but we got to kind of use some common sense here and take a look at overall market structure, any news events, what the overall market or even that particular sector or group is. If you're trading cattle, what are the meats looking like? If you're trading Apple, what is technology looking like? So using also a little dash of common sense, where are we in regards to the 200-day moving average, support, resistance? I'm not looking to buy things right into resistance or sell things right into support. Let's just use some decent judgment. No, not looking for 52-week highs or lows on a 5-minute. That would be crazy. So we're looking at session highs or lows on anything intraday, whether it's a 1 minute, a tick, 5 minute, 15 minute. I'm going back left and I'm going to the 5 p.m. blowback slope. So not taking into account 52-week highs or 52-week lows. Platforms again, Thinkorswim, TradeStation, NinjaTrader 8, and MT4. Jill, you should email support. She's bought the product before. I don't day trade the stock. If you're day trading the specific stock in real time during the market, will the indicator post as you are trading? Yes, it will post as you are trading. And I appreciate you bringing up that point. We do have these scanning components available, and you can have multiple scans running at the same time. You should see one of my screens. It's almost dedicated to scanners. So I've got scans scouring the market for 1, 2, 3 bottoms, 1, 2, 3 tops on a daily basis, on a weekly basis. I've got 4-hour scans going, got 15-minute scans going, all on various markets, futures, forex, stocks, and you can have those scanners running for you, finding both those that are in setup mode, meaning they have not yet triggered, or those that have triggered. So that was a comment that was delivered to us by a user, and we said, you know what, that's a good idea. He said, I don't want to look at things that are just setting up. I only want to see things that have triggered. So we had that scanner component. So we've made so many additions and enhancements to this over time. Didn't charge an extra red cent for it. You're going to get any new updates as they come for free. It's included with the package. But frankly, I don't know of anything else we can do. It's just so darn good. All right, appreciate the comments, Robert. How much do you trail and continue to trade? I don't know what you mean. You mean contracts, or how do I trail? What is a percent accuracy? I mean, it's hard to say. You know, are you looking at tick charts? Are we looking at 1 minute? Are we looking at daily, weekly, 5 minute? You know, it's impossible to answer. What is what is the risk, the win rate? I would say it's probably anywhere, I don't know, 70 to 75% if I had to say. But again, what are you factoring in as a win? If it goes tick profitable or 50%, a lot of times they'll trigger. The point is it getting you in on the right side of the trade? Are you getting enough momentum to carry through that number 2 point where you can quickly dial in your stop and your risk? We're not sitting there like a gorilla and just leaving our stops arbitrarily up there above or below the number ones. The point is it get the market, the setup will get you into the market enough where you can take some profits and then tighten up your stop and then hopefully get some runners there. Typical risk on the futures, again, it all depends. You know, the risk on coffee may be different than the risk in 30-year bonds. And again, are we looking at a 5 minute or a daily chart? The risk metrics are going to be significantly different there. Link should be working. I've seen people saying that they've joined. It's a one-time fee, $397. You're going to get 30 days of the SST Pro Trade alerts. There's no shenanigans, no tomfoolery. You get the 30 days. There's no hidden auto renewals or subscription fees. You don't have to do a thing. If you want to continue, just email into our support desk and we will hook you up with a nice fat discount. I'm using daily and weekly highs and lows. Yes, one-time payment. How do I trail? I trail using significant areas of support resistance, moving averages, and trend lines. Those are really my 3 primary ways that I trail stops. Drawing trend lines, placing and tucking stops below support or above resistance, and then also using moving averages. Yes, I do show hap. Yeah, if we have some time, we'll take a look. Let's see here. All right, Jill, like I said, email us at our support line. We'll get you fixed up. All right, so let me ask Jeanette if we got a couple minutes to take a look here.
Yeah, go ahead. You got literally have 2 minutes. Go ahead.
So just so you can kind of get an idea of what we've done in 2019 is, see, we've closed out 19,000 in January, a little over 4,000 in February, around 1,800 in March, around 7,700 in April, and just slightly north of 11,000 in May. And then we took 2 trades earlier this week in silver and euro currency, and we just stopped ourselves out at break even. They ended up continuing to move sharply higher, but that's what you're going to get is you'll get access to all these great seasonal ideas, the archive, and so on. And So you can check all that out yourself once you become a member. So I want to thank everybody again, and I want to thank those that are joining. I'm getting lots of comments that they're in, and I will be looking for you in the support box. There is the link again, seasonalswingtrader.com/3. Again, you own the indicators for life, indicators and scanners for life. You own all the educational bonuses for life, and you will get support from myself as well as our support team. One-time fee, $397. Appreciate your time today. Hope you learned something, and hope to see you on the inside.